My name is Karl. I work at SEB, which probably most of you know about. But essentially now I work with in an engineering team that develops and maintains the equity and equity derivative trading platform. So essentially it's the technical infrastructure that enables you to conduct trading business. And I was actually going to give you walk you through sort of a timeline of the events that has shaped the market. We have heard some of this from previous speaker already. It's a local market. It was subjected to deregulations, heavy deregulations during the 90s. The new options market was started, new financial instruments, new financial innovations that even the legislators hadn't even a vocabulary for. So at this time it was really, so to say, the trend was really financial innovations and deregulation. And also as the stock markets went public, they became increasingly electronic, as we heard. Many of them adopted the market model of open central limit order book. So that you could you took all the orders from the market participants, you sorted them according to some principles and matched them according to some principles, and then you distributed this information immediately to all the participants in the marketplace. So it's a very transparent way of doing business. This allowed members of the exchanges to offer their clients direct market access to interact with the exchange. So you could essentially, without a middleman, trade equity and equity derivatives. Retail brokers, they offered like day trading solutions during around the dot-com bubble. But essentially, during this time, it was still, it was still looking a lot like to the very left picture here, pre-2007, meaning that all the liquidity was essentially centralized in the traditional exchange. Whatever business you didn't conduct there in the equity space, you did over the counter or OTC. Then new venues started to appearing, both new exchanges where company could go and get listed, seek capital, get the shares listed, but also sort of alternative marketplaces where already listed companies' share could be traded. And these alternative markets, they were actually usually formed funded from alliances of sell-side institutions like banks to put pressure or compete in transaction cost with the traditional exchange. And this then gave rise to the concept or need for smart order routing in the trading platform to essentially, if you have an order in an instrument, which venue do you send it to? Basically in 2007, this concept of multi-listing is formalized with MiFID, which we heard the name a few times already today, European regulation. So with MiFID now, assets are on these on the traditional exchanges, and alternative exchange is truly fungible. So you're really, so to say, exchanging and trading a claim on the same asset. You should, as an investor, be indifferent to where you go about and do your business. And now liquidity becomes really distributed. So then gives rise to the need of algorithms in your trading activity to essentially seek liquidity or hide the liquidity you provide to the market. So then you see there we are now between 2007 and 2010. We have these new marketplaces, and it becomes increasingly complex. I mean, these markets, they form some sort of self-adapting complex system. The liquidity is moving around. You have algorithms that interact with them and not only change, so to say, the state of the market, but also the dynamics of it. So in some sense it relates a little bit already to the artificial intelligence, or you could like have self-adapting algorithms maybe. You would maybe get in trouble with regulation if it misbehaves. But these sort of say intra-market dependencies that are created, they also give rise to a lot of arbitrage opportunities. So essentially, a lot of money is invested in high-frequency trading technology, and so it's basically competition for getting the financial data from the different venues as quickly as possible and react to it as quickly as possible, and to sort of say exploit these inefficiencies that occurs. And yes, performance. We heard Rolf talk earlier about performance and the need of that. This is becoming increasingly important, but also the cost of gaining the latency advantage versus how much can you actually earn. So you see, I think it was some other speaker that also said that there is some sort of consolidation in this space and a little bit flatlining more. And essentially now, what will happen next year in 2018 is that MiFID II, which is the next step of this European regulation, is enforced. It will radically change the market dynamics. I don't know if I should. It's too late in the evening to go into details about the actual regulation, but you can say we had heard. I actually never heard the word before, but some previous speaker talking about RegTech or regulatory technology, and so to say, technology is really becoming an enabler to stay compliant, because you can understand the huge amount of data in these complex networks that you have to store, you have to structure, you have to provide to the authorities if requested. So it's a lot of so to say big data management, and also I think I want to a little bit highlight as well, because now this big red ball at the end is like that is all about regulation. It is now, but of course within the regulation, as always, I mean, markets are always driven in one way or another, is impacted by regulation. And even with MiFID II, there are, of course, mechanisms for sell-side firms or banks to compete and to try to gain market share. So, I mean, we believe that after this big red bubble, there will be a big yellow bubble and a big green bubble just continuing, which is, of course, makes it obvious that the so to say new skill set required in this industry is what you guys can provide with the technical background. Even though I would say that market will, of course, the fundamental supply and demand dynamics, knowing your market, knowing who is buying, knowing who is selling, will still be important. So to say, if you want to work with this with a technical angle point, some sort of like interest in the market is, I think, is good. And yes, we are also looking for people. So I think maybe there will be some email address coming up on the event homepage or something. But yeah, no, I hope been able to create some interest in this field, and thank you for your time.